feel like. Host disabled participant sharing screen. Can you help us help us enable sharing of screen?
All right.
Okay. So I quickly went back to see what caused this rejection. So this is the historical low, the lowest low ever. That is why there were probably a lot of sellers that were resting here. That was why it gave that very serious impulsive. He left behind a rejection candle. So as price began to deliver, so what happened was this price took the lowest low that was existing there, thereby leaving a rejection candle. Then it started the bullish PDR raise. Price went up, bought and came to mitigate here where there was rejection resting here. Because this we can it's safe to say that there was a fair value gap here. Yeah, so price came back here, tapped off it. Now returned back to the fair value gap that was created at this very point, at this very position. Price dipped into it, touched the 50%.
Yours, any other voice cracking?
Is my voice cracking?
Or is it my laptop?
Please, was my voice cracking, guys?
No. Robina's voice was not cracking.
So let me go on.
All right.
So let me just zoom into this place so just see properly. So price came up to this point, reacted off this fair value gap that was left here. There were a lot of sellers here. It brought about a serious rejection. Price now came back down again, like a ping pong, came back here again and reacted off this fair value gap that was left, this imbalance that was left. It dipped into the 0.5. It bought, left some inducement here. Which definitely price would come back to take off, which it ended up taking up at this point. Price came back here, took up all the liquidity that was resting, now came back down, price also broke market structure, came back and reacted off the sponsored candle, which we had initially. Now price delivered a higher price, which took out this high here. But still, this fair value gap, I want to believe there were still a lot of sellers here. That was why price was not able to break through initially. Price came back down here, created an inducement. Probably if we go into a smaller time frame, we'll see why price. We can as well see there was a fair value gap here. That price dipped to the last. Price like drank literally everything, took everything up, took all the resting orders that were here and started delivering a very serious impulsive move. So this was a candle here, this indecision candle that broke this high. So this was a lower high. Now price ended up coming up here to deliver a new higher high. We can as well say, if we go into a lower time frame, I'm sure we'll see a zone here. But we can say, from my own understanding, this might be a hidden base, or some people call it buy to sell candle, because this is where you have candlestick entering into both candles in opposite direction. So price came up here, tapped into it, still wasn't able to break through, came back down here. Now price because when price led this expansion, because in our PDI, we have the rejection candle, it leaves behind the breakup blocks, then leaves behind the expansion, the fair value gaps, and all whatnot. Then price, Yeah, so the bullish order block, the fair value gap, price came back here, down here, ratted off this fair value gap in this PDRA. Now started delivering a range structure. So this is what we call trendline liquidity, price selling, buying within a range. And when it did that, it took up all this liquidity that was resting up here, took it off, drove it up to this very point, where price ended up reacting off a zone, which I'm sure if we scroll to this place or go to a lower time frame, we might end up seeing why price was not able to break that particular place. Price now started it was induced severally. You can see it was liquidity resting up here. That's why if you see here, if you zoom into this place, you see that this price itself delivered and took out all the liquidity that was resting up here. Then it was able to give price that strong push to even come down here, take up. My internet is stable. Are you like? I want to believe I'm still communicating. So price quickly came down here and took up the liquidity that was resting here from this sell side.
Your voice is cracking.
Let me just hurry up. Network. This network people are very crazy. So price came.
I think is from your end. Because it's very clear at my own end.
I think it's breaking. I think
His
his voice
is
breaking.
It's your own voice that is breaking, ma. His voice is clear. I think it's your network. Yeah, I think it's your network.
Maybe my laptop is already acting up again. You guys can go on.
Yes, let me go on, man. So price came back down here, took the liquidity that was resting up here, and created an inducement, because we can see here almost equal lows here. Price went back up and reacted off this particular zone that was created. This we can safely call it a sponsored candle, a bearish sponsored candle. Price kept there was now a break in market structure, because price took out the high, took out this high here, and took out this low. So as Queen will call it, the Quasimodo structure, where price took out this high and came down here and took out this low. If we go into a smaller time frame, I'm sure we'll see an order block.
Is my voice okay now?
Yes, ma. Yes, ma.
Is okay now, right?
Yes, ma. So
yes, ma, your voice is okay.
So we can see here that price created left behind an order block. Sorry, not order block, left behind a fair value gap at this particular place. Let me just color it green. Price left behind a fair value gap, which markets ended up dipping into it fully, then started delivering, now continued what we call a break in market structure and started giving us lower lows and higher lows. So as you can see here, market structure got broken here. There was a break in market structure, hereby introducing the bearish momentum. Price was now moving in a bearish, was now started creating a range structure. But if we look up to this point, there's this fair value gap, this imbalance that has not been filled, with price ended up tapping into it. Price tapped into the more than 50%. More than 50% of it tapped into it, got all the orders, all the buy orders that were here, and started delivering a bullish price. So what price did was price now had to take up all this liquidity that were resting up at this particular place. Price took up all the liquidity that was here, that the range structure left behind, took up everything. With this, if price initially came here, was not able to break, then it created a candle here. We can call it a bullish. We can call it a bullish. Probably this might be a breakout block, but we can still call it an order block because it was the last candle after. Before? Was it before? Well, after the very strong bullish momentum up to the upside, took out all this liquidity that was up here. Price now went back again to this zone, came back to mitigate it again, and still give us a bearish market delivery. This was an inducement. Price came down here, took out the liquidity that was resting here, still tried to come back up, but what it was doing, it was leaving liquidity all around this place. And when price leaves liquidity like that, we know that price will definitely come back to take it up. So we ended up seeing this stop. We ended up seeing, so this is a gap. This is that gap, market gap. As you can see, there's a gap here. And whenever there's a market gap, we know that price would still come down here to fill it up in the long run. Let me change this color. Yeah, so there was a gap here. Price came back to, ended up taking all the liquidity that was resting here. I'm sure if
Obina, sorry, please, I want to take permission from Queen. Please, I want to go to the mosque. It's time, please.
All right.
So somebody needs to replace you like your captain, someone who can speak on.
Our group is done, but my members are still around.
Yeah, so I mean someone has to like say something, just since you usually talk on their behalf. So I want to believe that so if you put on these highs and lows, these sessions, price must have come to take probably a month high, about. I can't see that here. Okay, probably the price came up here, took a month high. Yeah, premium month high, whatever. So price was still delivering bearish. We're still giving us some bearish momentum. Price came back down, took up all this liquidity that was resting up here, came in here, filled up all this imbalance, filled it up to the tip. Price rejected. So I want to believe that the fair value gap that was left here, price reacted off it, came back to this zone, still gave us a bearish market movement. Then there was now a break of market structure, because initially here was giving us higher highs, lower highs, a higher high, then a lower high. Then instead of it giving us a higher high, it's safe to say that this low is weak, because the momentum that was created with this higher high ended up taking out this low, thereby delivering a break in market structure, and the market now shifted from a bullish structure to a bearish structure. Price kept on delivering a bearish momentum. Price came up to this point, came down here, filled up this market imbalance that was here. The price left initially. Probably it's safe to say that there was a stop hunt here. Or we can say maybe this is reacted off this candle that is here. Everything is possible. Price tried to start up a bullish array, but it was not able to take out this high. So it's safe to say that this lower high is a strong lower high, because price was not able to take it out. Then price now took out this lower low, showing that this place is a strong lower high. Price came back down, induced, took up all the liquidity that was resting here, came about here, did an inducement, now started delivering a bullish market structure. And once it was moving, it left fair value gap here. Price didn't fully react off it. Price didn't fully react off it. Price came back to this small candle, came back down, was moving in a sideways momentum, giving a range structure. If we go into a smaller time frame, I'm sure we should see this range structure that is here. Range structure, right? Okay, good. Yeah, price give us a range structure. What it means is that definitely in the long run, price would end up taking up all this liquidity that is resting here. So this was the last bearish candle before this very strong impulsive move to the upside. Then it's safe to say that there's a zone here. So for price to continue is bullish momentum. Let me put it for, I don't have this in here, so 3 hours. 3 hours. So this is a very serious price movement to the upside, took up all this liquidity that was resting up here. Now price has left an imbalance, a very serious imbalance, which we're expecting that price would definitely come back to react off and either fill it up to continue. Well, this might not be a zone, really. This might be the actual zone. So if I'm to have a POI, if I'm going to have a POI, I might be looking at this particular place as my POI. So this will be my AOI, my area of interest 1, for price to continue a bullish momentum. Wow, this presentation has been long. So I'm anticipating this. So this can be my anticipation. This can be my anticipation, or price can as well dip down to this place to take up this market, this monthly low, because price will always want to come where they see liquidity resting. So I can also have a zone here. It's safe to say that I can have another zone, another area of interest on the 3-hour time frame, somewhere about here. I can try to put it below. I know if I go into a smaller time frame, I should be able to how's it called again? So this is HI. Man, I just forgotten that verb that is used to prime to get a more accurate entry. So my expectation is that price would. So price got up to this place, an inducement, and it left an order block. Sorry, not an order block. A sponsored candle. There's a sponsored candle here. There was a sponsored candle here, which has been induced. Supply. 3 hours. So price has induced this zone here. Has induced this zone. So I'm expecting price to keep to now. There has now been a shift of market structure, because looking at this place, there's a break of market structure to this side. Break of market structure to this side. Price came down here. Price took out the high. Took out this high. Safe to say that price has delivered a Quasimodo, but price came, took out this high, and the move here, the order block created here was strong enough to take out the low here. So that is why we are now seeing a shift in market structure to the downside. So I'm expecting for price to. So
All
price.
students did not presentation. Do you know everybody that attended this presentation?
Sorry, ma, I didn't hear you, ma. What did you say, please?
Do you know those that attend the presentation?
I know my people who are not here. I know them. I know my people who are not here. So this is I want to believe price. So this is Asian high. This is Asian high. So price might be reacting off this zone. But if we go into a lower time frame, we should be able to see a proper view of what's going down here. So I'm expecting price to sell, pick up this month high, pick up this previous week high, pick up this month high, pick up. But why? I don't know. It can't be, because this is a high. So this was what created. Okay, all these were already taken. Sorry, all these highs have been taken. They've been taken because when it came up, it took it up. So, but I'm expecting price to come back down here to react all this place to continue to give us a bullish market, to deliver price bullishly. So, like I said, it was TJ that was supposed to handle this 3 hours, but it's nowhere to be found. So I'll be leaving the floor now for our friend and colleague who will be taking the 2 hours. I find it difficult to pronounce his name. Yeah, Kanan, Mr. Kanan.
Kanan.
Yeah, Kanan. Yes, thank you very much.
Yes.
So, okay, I'll have to unshare my screen, I think. Let me stop sharing. I'll stop sharing.
When I put that is when David is joining the Zoom. You can imagine their irresponsible behavior. When I updated that they would not be added to the inner cycle group, that is when David is joining the group. Most of you are so irresponsible. That's why you are joining the Zoom. Because you want to be in inner cycle group thinking you'll be copying signal. I will still kick you out. You saw that the Zoom has started, you didn't join, but when you saw that message, you decide to join the Zoom. It's funny.
Canan, please, you can go on, please.
I don't know why
Good evening, all.
Go on, please. Who's presenting? Just let me know your name, okay?
Kannan.
Hanan.
Yes.
Okay, go on there.
Market is now in premium range, premium PDRS. So here is a Panzer candle. This low to this high is a dealing range.
Okay. Right on.
Dealing range. So market now buy model is completed. So here is a break of market structure to bearish. The fair value gap is now filled. So now market is premium range. So I am expecting this market to discount for this fair value gap, this order block. Here is a 2-hour fair value gap. So market buy model is completed. So market now shifted to bearish. So here is a premium range. So low formed. So this is a external range liquidity. Here is a low is a external range liquidity. Now market reacted this order block. So you bearish order block. So I'm waiting for displacement here. So and then
it's going for that higher
entry.
I think price is going for that higher high. It's too clean.
Oh.
What do you think? Because we don't have any clean movement. That high is too clean. So I think price will want to eliminate that high because there's still fair value gap above that was not clearly mitigated.
Oh. So this higher high, higher high form means market here fair value gap is formed. So now retracement we trade in long position. So external range liquidity is taken out. So next we wait for retracement here. Thank you.
Okay, please, Canan, can you unshare so I can share?
It's just the two of you from no other person.
So mine is 1 hour. 3 hours was for Tejiri, but he's nowhere to be found. So I want to believe when I'm done. Shane is here. Shane is 30 minutes. Shane will go after me. Then David is 15 minutes. David was there before. Dave was there before. Where is he? Just gone.
He left. I think he just got back in not quite long.
Okay, let me go on. Let me go on. So what are where are you? What do we have here? Okay, let me just turn this thing off. So if I'm to not go too far away from where I stopped, so if I look, this is I forgot to say that a market maker buy model was complete at this very point. Price had to take up all the liquidity that was resting up here, and the next thing it is supposed to do is to come and take back the liquidity that is resting all here below. But you saying that price that these highs are too clean. Well, with all these rejection blocks that are here, it's safe to say that this zone has been fully mitigated, but you never can say. Price is crazy. Price can as well come and take up this liquidity that is here. Price might decide to still react off liquidity that is up here. So even if I want to enter into any trade, I will not just jump in. I would be a bit careful. If I don't think I'll be looking for. I will have to confirm properly on my lower time frame for me to jump in on the sell. So I'm expecting price, because you see here, there has been a lot of rejection here, just too many rejections, because this rejection candle just shows us that possibly there are a lot of sellers that are just resting here. Price keeps on. But here, if you see, price has broken structure. There's a market structure. There's a break of markets. There's an SMS market structure shift. Even at this point. So if we say that this was our highest point and this was our lowest point per se, price has taken up the high and has taken up this low. Has taken up this low, and price has taken up this high. So I'm expecting that price should probably react off these candles that are here and deliver a sell move to the downside. If this POI is invalidated, price might still want to come back up to this place, or price might decide to just come up here just because they are market makers and they want to mess everybody up. Come up here to take the liquidity that's resting up here before they deliver their price to the downside. And like I said, I won't go in until I go into my 1 minute time frame and I see a very serious shift in market structure before I would proceed with a sell move to the downside. Because typically looking at this rejection candles, there are just too many. There are just too many, showing us that there's very serious, strong accumulation of, there are a lot of sellers resting here. A lot of sellers are resting here. So
that's the reason why they will rate that high. They will rate that high instead of too high.
Okay, they will take it. So that means that might be a stop hunt. It's only take it up to maybe like 20
They might
pips.
want to just do a stop hunt.
Stop hunts and
establish a new high.
Okay, great. So this can be my POI one, which my AOI one, which is almost looking like it might invalidate it, but we'll keep our fingers crossed. So I can as well say this is my area of interest too. Not sure yet, but we'll just keep that. So if we go into a smaller time frame and see what is going in down here, we'll be sure. But like I said, nobody knows what price would do. So I'm expecting price to start their market maker, because price has already begun their market maker sell model. I'm trying to pick up that tool. Yeah, but let me zoom out. Maybe. So this is what I'm seeing here, and I'm anticipating for this to happen. So I think for me personally, that's about it for the 1 hour time frame, because left for me, my strong point is here where I'm already seeing this shift. There's a shift of market structure, but like you said, they might decide to come up here to take up liquidity here. But my general bias going forward to next week is I'm hoping to see price delivering bearish PDI raise down to this zone. Thank you, ma'am.
Can you check your higher time frame? The upper part is not clean.
Okay, higher time
for hour. Part is not really clean. They just reacted above a breaker. So if they are definitely going to continue bearish, they need to have a clean mitigation, a stop hunt and break of market structure.
Stop hunt. So now they come
down, they will need to rate that high again to create that stop hunt.
Because there's no stop hunt here, like you said. Yeah, here it's really clean. Still clean. Too chamfered. Stop moving now. Okay, I think I get you. So you're anticipating that there has to be some sort of move that will come up this way, make it look jagged before they'll now come down. Okay.
Exactly.
Okay. We are waiting for them next week. So today's almost gone. Today's almost gone. So, Mr. Shane, are you available now? Shane, my G.
Yeah, I'm good. I'm good.
Nice
Yep,
one.
I'm here.
All right. So let me stop sharing.
Sure.
Cool.
Okay, I'll share mine now. Can you guys see my screen?
Yes, we can see your screen. So many
Okay.
boxes.
Yeah, okay. Hi, everyone. My name is Shane. So my nickname is Preferred Choice. So nice to meet you guys. Okay, so I'm going through
On the line,
30...
second, Shane.
Yep.
Is this not Jiginga brother? Sorry, I don't
Sorry?
know how to. Is this not Jidinga brother from Indian?
No. I'm from Singapore. I'm an Asian.
Okay. Sorry. How you
Yeah,
doing?
no worries. Yeah, I'm good. I'm good. You have been fantastic, Queen. I learned a lot from you.
Thank you.
And
Obina.
glad to be here.
Yes, ma'am. Yes, ma'am.
Well done. You did a very good job. I'm really proud of you, Obina.
Thank you. Wow. Thank you.
There are some people I know that will go very far. I'm proud of you. Just continue like that. You did a good job. I like the fact that you took your time. You were explaining like a teacher. You were almost, so I think I'll come and take mentorship from you.
Queen, are you whining me?
Let me know your sister, please. I want to come and sign up. All right, thank you. That's just humor. So thank you. My friend Shane, you can write on. Thanks for your compliment anyway, Shane. I believe that many of you will do better than me. Trust me.
Yeah, thank you so much. We hope so. Okay,
Yes.
so I'll go into my chart. So the front part, I'll just cut it short because I think the higher time frame has already went through. So we actually transited from a consolidation, and then there's an upward bullish market structure. So, but you can see that there's actually on a 30 minutes time frame, or even in the higher time frame, you can actually see that there's very impulsive move upwards. All right, so leaving a lot of fair value gap, a lot of prices imbalance. So prices actually went up on a bullish to form a bullish structure, and in between this, leaving a lot of fair value gap over here, which is my area of interest. All right, and also leaving a lot of internal liquidity over here as hanging fruits. Okay, so prices went up, cleared off. So this peak over here is actually belongs to the fair value gap of 50% fair value gap from a higher time frame. Okay, so it actually wicks it out at 50%. There is actually a change of market structure. Now we are actually, according to the lower time frame, we are actually going on to a bearish structure. So the prices is actually forming a lower high, lower low, lower high, lower low, all the way downwards. All right. So I go into details now. So basically, when the price left, leaving this small little doji candle, when the price left, it actually came back up to mitigate the sponsored candle. This is supposed to be a sponsored candle for me, in this area. So price actually came back to mitigate the sponsored candle, and then it went back down. Okay, so on the way down, there's actually an impulsive movement. Okay, so basically they form a BOS over here, and then there is actually an impulsive move upwards to take out the liquidity that has been formed over here. And then there was you can see very clearly that it's a stop hunt because there's an impulsive upwards followed by impulsive downwards. Okay, so when this impulsive price movement came down, it left a price imbalance over here that would be a place which I feel that the price will come back to mitigate. Okay, so the price continue goes down, and you can see there is actually no wick that comes back here to mitigate. Okay, so as price continue the downwards movement, it actually came back up to form another BOS over here. All right, and then continue the downwards movement. So I think just today, the price came back down, filled up 50% of the FVG, which is an IOFED, and then price is currently going on upwards. So although price is going up, you can actually see that overall the structure is still bearish. So price has went up to take off this order block over here before, and price would, from how I see the chart, the price will actually either come back down. We have to look at the lower time frame candle. It will either come back down, or it will go up to fill the price imbalance at the top, or there is actually an inducement of the, there's a lot of liquidity lying over here. So they will either come back up to clear off this price imbalance, or they will just go straight up and clear off all the liquidity at the top before its movement downwards. So price, we are seeing some correction over here. Is actually leaving a wick, but the candle is not closed yet. So assuming that the price is coming back to the downwards trend, then my next POI will actually be a breaker block over here, or the sponsor candle. So I'm targeting likely will be the sponsor candle over here. So the price will actually sell from premium to discount over here, and to mitigate this sponsor candle before going another upwards. Yeah, so it is actually a downwards movement. So, yep, that is all.
Thank you, Shane. Please, Ma, we have less than 1 minute now.
Okay.
Yes, ma'am. Dave.
Shane, well done.
Yeah.
Thank you. Thank you so much.
Okay, David is
So,
online now. David is online. David is the last person.
Okay.
Okay, so I'll stop share. Thank you so much, everyone. Thank you.
You're welcome, Shane.
Welcome.
Good afternoon, Ma. Good afternoon, house. I don't know if
I can hear you.
everybody can hear me.
We can hear you, David. Nice one.
Yes, I'm very sorry that I'm taking this presentation on my phone because I'm not with my laptop. So I'll try and share my screen. Let me see.